Welcome back. Among the stocks which is buzzing in today's trading session is Zen Technologies, up 7% after a stellar set of numbers coming in the fourth quarter. But remember, today is not the only day the stock has been gaining. This year itself, it's been a big outperformer, up almost 66, 67 odd percent. And this ties in with the defense stock themes as well. So let's get chatting with the management of the company. Ashok Atluri, who is the chairman and managing director, joins us to discuss the quarter four earnings, but more importantly, the way forward as well. Mr. Atluri, thank you so much for joining in. For the entire year, you've done 160 crores in revenue, of which in the fourth quarter itself, you've done about 95 odd crores. So just wanted to understand if there was a one-off in the fourth quarter, or this quarterly run rate of 75 to 80 crores per quarter is something that you should, sustain going forward.
So the execution has been skewed towards the fourth quarter, and we expect spillover. Last year we had about 400 crores worth of orders on hand. So the execution is happening, and of course the next quarter is also going to be very, very strong, in fact. But will all quarters be like this, keep increasing? No, there will be some volatility, but it will be at a much higher level. We don't think that the lower level volatility will be there. But but I think the story has changed significantly now.
All right, Mr. Atluri, your consolidated basis, you've done close to around 219 crores for the year. Now you're saying the next couple of quarters look good, and I recall a few years ago when we used to get you, we just say, what about the order book? Now you have a decent order book, and there is some visibility in terms of order inflow as well. So that's good news from your shareholders' perspective. Tell us about execution. Earlier when we spoke, you were talking about an FY24, you could do around 400 crores. Is that number still gettable? Point number one. And margins have been in that vicinity of around 30-35% odd. But operating leverage plays out for you because your fixed cost doesn't go up too much. What is the margin band we should work with, Mr. Atluri?
So, one thing is that margin bands will continue to be good, but, we should always remember that the raw material costs, etc., have gone up since last year, since we spoke. The Ukraine war, etc., had played havoc with the, supply chain. And there is a delay, but we again, the 470 crore order book position that we have definitely gives us the confidence that we'll reach 400 crores of revenues in this year. So based on the order book position, I do feel that 400 crores is achievable.
400 crores of revenues, and you're saying margins can be a little volatile, but still it will be in that vicinity. 30-35% we should work with?
Yeah, we should say around 30% at least, yeah.
30%.
All right, margins around 30%. In terms of order inflow, I mean, in the fourth quarter, I was just looking at some order inflows that you got, close to around 141 crores. Is this run rate that you expect going into the next year as well? What kind of order inflows are you targeting in FY24? And if you could break that up for us as well. How much comes in from AMC? How much comes in from exports? How much comes in from drones?
So, so if you look at the order book position that, we have about in that 470 crores, about 100 plus crores is AMC, about 90 crores is drones, and the rest is simulators and training systems. So, the training systems play a major role for us even now because they are the 30-year-old legacy for us. And going forward also, we think counter drone picking up, but training simulators still being a very dominant force. And we expect now, as we have announced in the press release, that, we expect very large orders to come in the next couple of quarters. And so this run rate will be there. So we think both domestically and internationally, the run rate will be significant, yeah.
Could you quantify what very large means?
I'll leave it at that. 127 wasn't very large. It would be something I would say that, yeah.
Okay.
So all 200, right. Maybe perhaps a little more than that as well, I guess.
Some of your investors got into the stock thinking about the simulator, but then you're ticking off on a drone, it seems, so which is good news, going by the stock price move as well. But Mr. Atluri, let's get some more details coming in from you. R&D, that's moved to the all-time high. I think around 19 crores is what you spent in the past year. For this year, what kind of a number will R&D look like? Because, R&D is something that you focus on, and that in turn gives you a lot of revenues, a lot of potential as well. So R&D expenditure, point number one. And also medical devices revenue, you said that, the coming years it will ramp up. What do you expect it to contribute, say, in FY24 and 25?
So I'll start with the Zen medical devices. There has been zero activity, and it's a new market, and there is so much of activity in our simulators and counter drone system that we are not doing much in the medical segments thing at all. So, so there is no activity there. So I'll leave it at that. And in the With respect to the other question,
R&D.
we do expect, R&D is, we are accelerating the R&D. R&D is increasing, and it used to be something like 20-25% of our turnover, but now it will not be that much, but we think that there are opportunities. There are a lot of opportunities in defense, especially we want to be, as we are in the training simulator segment, we are absolutely in one or two in all the segment, all the products that we are in. We want to be similarly in counter-drone systems. So we will be investing a lot of R&D in counter-drone, especially in hard kill segment, to become in the top one or two category dominant player.
20-25% of your sales perhaps would have been on a smaller base, and now that as we speak, on a consolidated base, if you did 19 crore R&D last year and, with 220 crores of sales, it is obviously closer to 8 to 10% of your overall revenue. So is that a mark that R&D will sustain at even at higher levels of revenue? Or as your revenue increases, as a percentage of sales, R&D comes down? Just wanted to understand that fact.
So,
and the other one, go ahead.
Yeah, so don't ask me two questions because I'm forget the first one. So, so R&D, I think R&D is, we are very opportunistic. We don't say, it's a very, very, thinking, how much will you spend as a percentage? We are very opportunistic. On a turnover of 140 crores, we have spent 23 crores of R&D. So, we will not restrict it to the percentage, but we'll go after opportunities. And if the opportunity is good, we'll spend a lot of money. If there is we don't see any opportunity, we'll spend less. But, it will be completely opportunity based. And now because we have so much of profit, we will go after larger opportunities that we think will take us to the next orbit from 3-digit in turnover to maybe 4-digit in turnover.
4 digits of turnover by when?
Whenever this R&D plays out, R&D will take time to play out, 3 to 5 years.
So say in the next 5 years, you'll be a 1,000 crore revenue company?
We should be. I would not be surprised. I mean, that's absolutely our aim. Yeah.
2028 then, should be the year, just going by that calculation.
You don't hold me to that year. The problem with you is, Nigel, you'll ask me 5 years later, you said 1,000 crore, why is it 900 crore? That's the problem.
No. I mean, going by the run rate you're going at only, that could be possible. But for now, we'll take it as 3 to 5 years. It is possible for you to hit that 1,000 crore mark. Final question.
Yeah, absolutely.
Very good to see revenues, very good to see order book. But are you getting the money from, all your clients, whether it's government, private? Money's coming on time? Is there any kind of delay?
So, our experience with the government, central government has been fantastic. I mean, it's very rare that a payment has gone beyond 45 days. If you have supplied the goods and we have the papers in hand and we give to the accounts department, our government accounts department, we get it by the 45th day, it's the bank. So, so it's been very, very good experience for us with the central government, especially. State government have been, little delayed sometimes, but, otherwise, state government is actually a dream come true for us, a dream run.
All right. Finally, then, AMC, when do you cross that 100 crore mark? This year, you intend to cross 50 crores?
No, it'll take, we'll cross, but that will take, because these orders will expire their AMCs in another 2 years' time. So the third year probably will hit the 100 crore revenue in AMC.
All right. Thanks a lot, Mr. Atluri, for joining in. The street likes what you've said. The stock was holding up in the green, well in the green. And now, after you've spoken about a possibility of, 400 crores revenue this year with 30% margins and perhaps looking at nearly a 4-digit revenue in the next 3 to 5 years, the street has seen a little more. And we've seen a bit of a smidge in terms of an up move on the counter. Thank you.